If you pulled out your phone in the next 60 seconds and discovered the Social Security Administration has been underpaying you every single month for years, what would you do? And more importantly, what would you do if you found out SSA never planned to tell you about it? If you found out the error was sitting right there in your official record the entire time, fully visible, fully documented, and fully correctable. But only if you know exactly where to look and exactly what to do before the window closes. Because right now, today, there is a 5-minute process you can complete on the phone in your hand that could permanently restructure your monthly direct deposit by hundreds of dollars. And millions of American retirees are skipping this check entirely because nobody in Washington is advertising it, nobody at your local field office is calling you about it, and the SSA website does not put a flashing warning on your account page telling you that your lifetime earnings record may contain critical errors that are actively dragging your benefit calculation down every single month. So if you are receiving Social Security right now, or if you are within 10 years of claiming, you need to stop whatever you are doing and stay with me through this entire video, because the most important piece of information, the single correction mechanism that can trigger a permanent upward adjustment to your monthly check, is coming later in this broadcast, and I am going to walk you through every step on your phone before this video ends. My name is Frank. This channel exists for one reason only: to make sure American seniors get every dollar they have legally earned. And today we are talking about something the SSA has never proactively publicized: a structural flaw in the benefit calculation system that has been quietly underpaying retirees for decades. And the fix is sitting inside a free government portal accessible right now from your smartphone. So let us get into it, and let us not waste a single second. Because your money is waiting, the Social Security Administration calculates your retirement benefit using a formula built around your 35 highest earning years. That is not a secret, that is public record. But what most retirees do not know, and what SSA has never made a point of broadcasting in plain language, is that the accuracy of that 35-year calculation depends entirely on data that was reported to the government by your employers, sometimes decades ago, and that data is not guaranteed to be correct. In fact, for millions of Americans who worked for small businesses, family operations, or contract employers during the 1980s and 1990s, the payroll data recorded in their Social Security earnings file contains errors, missing entries, and underreported wages that were never caught, never corrected, and never disclosed, and those errors have been silently suppressing monthly benefit amounts ever since. Because when SSA runs your benefit calculation and one of your strongest earning years shows up as a zero, or shows up with a fraction of what you actually earned, that year either falls out of the 35-year average entirely, or it drags the entire average down. And the result is a monthly check that is permanently lower than what you are legally entitled to receive. And the terrifying part is that this is not a clerical error SSA is actively working to fix on your behalf. This is a passive data problem that sits in your record indefinitely unless you personally identify it and initiate the correction process, and the tool to do exactly that is available right now on your phone at no cost, completely free, and it takes approximately 5 minutes to access. So here is what I need you to do right now. I need you to open the browser on your smartphone, and I need you to go directly to ssa.gov. That is the official government website, ssa.gov. Do not search for it in a search engine and click a sponsored link. Type it directly into your browser address bar, because there are fraudulent copycat sites that mimic the SSA interface and target seniors. To go directly to ssa.gov, and once you are there, you are going to look for the link that says Sign In or Create Account for My Social Security. That is the official personalized portal where your individual earnings record lives. If you already have a My Social Security account, your login will take you directly to your dashboard. If you have never created an account, the setup process takes only a few minutes and requires your Social Security number, a valid email address, and identity verification. Once you are inside your account dashboard, you are going to see a section that gives you access to your Social Security statement. This is the document that contains your complete year-by-year earnings history, going all the way back to the first year you had reportable wages. And I want you to understand something critical before we go any further. This statement is not just a summary, it is the actual data SSA is using to calculate your benefit right now. Every number in that earnings history directly affects your monthly check, and if any of those numbers are wrong, your monthly check is wrong, and it has been wrong potentially for years. So stay with me because in a few minutes I am going to show you exactly what to look for inside that earnings record, specifically the $0 years and the suspiciously low years that are the telltale signature of a reporting error. But first, I need to make sure you understand why this problem is so much larger than most people realize, and why the 1980s and 1990s are the decades where the most damaging errors tend to cluster. Before the widespread adoption of computerized payroll systems, wage reporting in the United States was a largely manual process. Small business owners, independent contractors, family farms, restaurant operators, and retail employers reported employee wages to the IRS and the Social Security Administration on paper forms, and those paper records were then entered into government databases by hand. That manual entry process introduced a significant error rate, transposed digits, misreported employer identification numbers, wages credited to the wrong Social Security number, entire quarters of earnings that simply never made it into the system, and for workers who moved between multiple employers during those years, the chance that at least one of those employers made a reporting error is substantially higher than most people would expect. The Social Security Administration itself has acknowledged in its public guidance materials that earnings records can contain errors and that it is the responsibility of the individual to review their record and request corrections. But here is the problem. SSA does not tell you in plain language that an unreviewed earnings record is a liability. They do not send you a letter saying your benefit may be lower than it should be because of a 1987 reporting gap. They make the tools available and they leave it to you to use them, and the overwhelming majority of retirees never do. They trust that the number on their monthly direct deposit is correct because they assume the government calculated it correctly, and that assumption is costing millions of Americans hundreds of dollars every single month permanently for the rest of their lives, because Social Security benefit errors that go uncorrected do not get retroactively fixed on their own. They compound quietly and permanently until someone takes action. And that action starts on your phone right now. And I promise you, the most important step, the one that actually triggers the formal correction and the potential upward adjustment to your monthly benefit, is coming before this video ends. So do not go anywhere, because what I am about to show you in the next segment is the part SSA is not advertising and the part that most financial advisors have never told their clients. Now let us talk about what you are actually looking for when you pull up your earnings record inside the My Social Security portal on your phone, because knowing how to read this document is the difference between spotting an error and missing one entirely. When your statement loads, you will see a table of years going back potentially 4 or 5 decades. Next to each year is a dollar figure representing the wages that were reported to Social Security on your behalf for that year, and you are looking for 2 specific red flags. The first is any year that shows a 0, a year where you were working, earning income, paying taxes, but the Social Security record shows nothing. That is a missing year. And depending on where that year falls in your earnings history, it could be directly reducing your 35-year average by replacing a strong earning year with a 0, which means your monthly benefit is lower than it should be by a calculable and correctable amount. The second red flag is any year where the reported earnings look dramatically lower than what you actually earned, a year where you know you worked full-time for an employer, but the record shows only a few $1,000s in reported wages. That is the signature of a partial reporting error, a year where your employer submitted incorrect wage data, or where a portion of your earnings never made it into the system, and both of these errors, the 0 year and the underreported year, are fully correctable through the official SSA process. You have a legal right to dispute inaccurate earnings data and to submit documentation proving what you actually earned. And when that correction is accepted and applied to your record, the SSA recalculates your benefit using the accurate data. And if the corrected year is strong enough to enter or improve your 35-year average, the result is a permanent increase to your monthly direct deposit, not a one-time payment, not a temporary adjustment, a permanent structural increase that continues for the rest of your life and potentially affects survivor benefits for your spouse. This is not a loophole. This is not a workaround. This is the system working as intended. You are simply using the tools you are legally entitled to use to make sure your benefit is based on accurate data, and the phone in your hand is the fastest way to start that process right now. So once you have identified a suspicious year in your earnings record, whether it is a zero or a dramatically underreported figure, the next step is to gather your documentation. And specifically, I want you to think about W-2 forms, because a W-2 from the year in question is the primary documentation SSA uses to verify earnings and process a correction. If you have old tax returns or W-2 forms going back to the 80s or 90s, those documents are your most powerful asset in this process. If you do not have the original W-2, the IRS maintains wage and income transcript records that you can request using IRS Form 4506T, that is Form 4506-T, and those transcripts can serve as supporting documentation for your SSA correction request. Now, here is where it gets critically important, and this is the part of the process that I want you to pay extremely close attention to, because this is the step that most people either skip entirely or execute incorrectly. And skipping this step means the correction never happens and the underpayment continues indefinitely. The official mechanism for correcting an error in your Social Security earnings record is Form SSA 7008. That is Form SSA-7008, and it is called the Request for Correction of Earnings Record. This is the document you file when you have identified a discrepancy between what you actually earned and what appears in your official SSA record, and filing it with supporting documentation from your W-2 or your IRS wage transcript is how you initiate the formal review process that can result in a corrected earnings record and a recalculated benefit. You can download Form SSA 7008 directly from ssa.gov on your phone. Right now, you can request it at any Social Security field office, or in many cases, you can initiate the correction process digitally through your My Social Security portal by uploading your documentation directly. And I want to be very clear about the stakes here, because this is the payoff that I have been building toward this entire video. If you are currently receiving Social Security benefits and your earnings record contains even one missing or underreported year from your peak earning decade, and that year is strong enough to displace a weaker year in your 35-year average, the permanent monthly increase resulting from that correction can be substantial. The exact amount depends on your individual earnings history and where the corrected year falls in your calculation, but the mathematics of the SSA benefit formula mean that correcting a single strong earning year that was previously missing from your record can restructure your monthly benefit by a significant margin, and that increase applies every month for the rest of your life. Now, compounding on top of your annual cost of living adjustments going forward, which means the total lifetime value of catching and correcting a single earnings record error is not just the monthly difference, it is that monthly difference multiplied across years or decades of remaining benefit payments, and that lifetime total can reach into the tens of thousands of dollars for a single uncorrected error. That is money you have already earned, money you already paid into the system through decades of payroll taxes, money that is legally yours. And the only thing standing between you and that money is a 5-minute review of your earnings record on your phone. And if you find an error, a single correction form filed with documentation you may already have in a filing cabinet or that you can request from the IRS. And here is the urgency I need you to take seriously right now. There is a practical reason to act on this today and not next month. The Social Security Administration processes benefit corrections on a rolling basis, but your ability to document old earnings errors gets harder over time. Employers from the 1980s may no longer exist, paper records deteriorate, and the IRS has retention windows for certain transcript types that are not indefinite. The longer you wait to review your record and identify errors, the harder it becomes to locate the documentation you need to support a correction. And while SSA does not publish a hard deadline for earnings record correction requests, There is a well-documented administrative reality that cases with strong contemporaneous documentation are processed more efficiently and more favorably than cases where the documentation trail has gone cold, which means right now, today, with your phone in your hand and SSA.gov, one browser, tap away, is the best possible moment to start this process. And I want every person watching this video to do three things before they put their phone down. First, open your browser right now, go to ssa.gov, sign into or create your My Social Security account, and pull up your complete earnings history. Look at every year, going back as far as the record shows, and flag any 0 years or any years where the reported income looks inconsistent with what you were actually earning at that time in your career. Second, if you find a suspicious year, write it down. Identify the employer you worked for during that period and begin locating your documentation. Check your files for W-2 forms or old tax returns from that year, and if you do not have them, visit irs.gov and search for Form 4506T to request an official wage and income transcript from the IRS. Third, download or request Form SSA 7008 from ssa.gov. Complete it with the relevant year and employer information. Attach your documentation and submit it through the My Social Security portal upload function or mail it to your local Social Security office. Because the moment that correction is accepted and your record is updated, SSA will recalculate your benefit using the accurate earnings data. And if the corrected year improves your 35-year average, your monthly check goes up permanently, and it goes up starting with the next payment cycle after the correction is processed. That is, the system working exactly as it is supposed to work. You are not gaming anything. You are not exploiting a loophole. You are correcting a government data error that should never have existed in the first place and claiming the benefit amount you are legally owed based on the wages you actually earned and the payroll taxes you actually paid. And if that is not worth 5 minutes of your time on your phone today, I do not know what is. Now, before you go, I need you to do something for me and for every other senior who needs this information. Hit the subscribe button right now because this channel publishes new videos every week covering exactly these kinds of SSA rules, Medicare adjustments, and government benefit updates that the agencies themselves are not broadcasting in plain English to the people who need them most. And more importantly, I need you to share this video right now with your spouse, with your neighbor, with your brother or sister, with anyone in your life who is receiving Social Security or getting close to claiming age. Because the earnings record error problem is not rare, it is widespread, it is silent, and it is costing American retirees money they have already earned every single day that it goes uncorrected. You sharing this video could directly put money back in the pocket of someone you care about, and that matters. Subscribe now, share this immediately, and go check your earnings record on your phone before you do anything else today because your money is waiting and now you know exactly how to go